Hello everyone, welcome to market review of October 8th. So today we had a up day, basically a reversal from yesterday, and whole Monday's candle got inverted or reversed, faded. So we had a New York continuation to the upside, the hourly market maker buy model, but the reason I'm looking at the hourly chart right now is because of the fact that I want to point out something that I also missed during the live stream, or overlooked, I would rather say. So from last week Tuesday all the way to the Friday's early price action, basically the overnight session, we had this consolidation here, or accumulation, which is essentially original consolidation because the price moved away from it initially on Friday. So we have this range, original consolidation, and now we have the range from Tuesday's low to Wednesday's high. Why these highs? Because it's smooth edges basically as the range and range equilibrium. So during the overnight session and yesterday, price dropped all the way down to original consolidation CE, or the 50% of the original consolidation, formed a trap here, but the trap was not confirmed until the PM session either way, or late morning session rather, and it rallied. So this accumulation from yesterday through basically the overnight session accumulation ended up being a low risk buy for this market maker buy model. Now it has not completed yet, but I'm expecting, or anticipating rather, the market maker buy model getting completed here during the Asia session, because it fell shy, just 2 ticks from the buy side liquidity. That being said, let's take a look at the New York session on the lower time frame. Drop down to the 1. Here I left the original consolidation 50% on the chart, which is basically the low of the day, and then I need to actually point this out. So initially it dropped down to the 50% of the original consolidation during Asia, and then it dropped one more time after midnight. This is, in my opinion, important. This is basically London PA, and then it displaced away from it. So by looking at this PA like this, actually let me zoom out a little bit. What we have is these relatively equal highs from yesterday's morning session as a buy side target from down here, and then the wick 630 wick from Monday. I can't annotate it. I gotta zoom in, which is also equal highs. Come on, okay. Which is also equal highs and ultimate target or terminus for the buy side. So that being said, I'll keep those on chart and keep reading the order flow here. We had equal lows. I mentioned this earlier in the stream. Equal lows, it ran during London and moved away. This is basically the first leg. Second leg, and during pre-market, it ran on equal lows again. No SMT though. Ran equal lows there as well and displaced. This is the morning session choppiness, the choppy price action for New York session. Basically seek and destroy, went for sell side, then buy side, then it consolidated and popped. Didn't even reach for the upper range gap CE. For a day like this, it's not common, but it's indicating strength at the same time, because the way I see price when it doesn't go for the opening range gap CE. It's basically indicating strength if it's bullish or weakness if it's bearish. So what confused me, not confused, but what I did not like from price today was the fact that it left equals. So the lack of SMT divergence basically doesn't have to be there, but I wanted to see a sell side sweep during New York session, which did not happen. So market initially formed the first fair value gap of the session, which was a busy. It initially accumulated inside the first presented fair value gap, did some damage to both sides, and eventually right during the macro, it traded down into a CE of the first presented fair value gap and popped afterwards, so basically displaced. Retested the open range gap high and broke out. At 10 o'clock, it immediately ran for the buy side liquidity, equal highs from yesterday's morning session here. It ran it, but it left inefficient price here, which means the market didn't offer sell side here efficiently within the gap, so it formed a busy displacement, and the candle open lacked sell side, and because of that, there's no manipulation here. Because of that, during the stream, I said this fair value gap is not high probability fair value gap if you fill it in the upper portion. And as you guys can see here, there was an SMT divergence, bearish SMT here. Let me just confirm it though. On the 1 minute. Right there. So ES made a higher high, Nasdaq didn't. And price dropped, basically slowly grinded down into the 10 a.m. open, which lacked manipulation, and then it popped from there. Once it trades down to no manipulation candle, it has to react as soon as possible. It could accumulate a little bit, but ideally you want to see only wicks, no bodies below it, okay? Which in this case, that was what was going on. We also had 3 drives, bullish 3 drives, ended up being buy side delivery. Equal highs left behind as I didn't want to do that, but equal highs was left behind during this pullback, and market immediately after forming a manipulation for the 10 o'clock candle. It rated the short-term buy side and cleared that level. And as you guys can see, this is the most important aspect of price action in my opinion, because it indicates willingness from price to keep running or not. So here it cleared the equal highs, but with that clearance it displaced. That indicates continuation to the upside. It's not just a sweep, just a buy side sweep. So immediately after the buy side purge, price came down into the 1 minute busy, accumulated in the upper portion, and popped at an odd time, in my opinion, 10:42, levitating towards the equal highs from Monday overnight session, 267, and it basically completed that within the silver bullet time window. Once it touched the high, it closed the busy, the 1 minute busy, and inside that order flow that I need to mention. So initial pop, basically the rate candle formed an order block technically. So then it slowly grinded lower, This is the first displacement. I'm actually gonna disregard the displacement because there's an inversion fair value gap, which is the straight shaded box. Market accumulated here, worked its way around the inversion fair value gap's upper portion, and along the way in this price action it left equal lows. This right here also as a trade, if you like to trade the counter trend, but it's a scalp obviously. So it worked its way around the inversion fair value gap, rejected the upper portion of the inversion and caused a displacement. That displacement was essentially used to reprice or to take out these equal lows and work inside the BISI from 1042. So it worked the lower portion of that BISI. Kind of choppy price action here though, I'm not gonna lie, but the sell side delivery to the equal lows on the 1 minute is a scalp in itself, because there is 3 drives here: displacement, equal lows, clear market maker sell model on the sub-second chart, I would say. And it offered, let's see, 20 handles, 22 handles, nice delivery. So it took out the equal lows, and it popped to the upside, came all the way down to the CE of the previous wick, rejected it. This is ugly, pump and dump, ugly, but it's what it is. Basically during the lunch hour, during the second portion of the 11 o'clock, it was basically forming equal highs and running buy side or building buy side. So here it built relative equal highs at the highs, and clear this, clear that, clear this, clear that. All right, and it built sell side here, equal lows. Initially it tried to run the buy side but failed, formed an order block here. This is the bearish order block, and then immediately after it displaced, formed a breakaway gap there, another SIBI, and that SIBI was used to take out the equal lows, clear the equal lows. From there it retraced all the way up to premium, which is the old breakaway gap. It's indicating the price is not being weak, because if breakaway gap is completely getting closed, that's not a good sign of a clean order flow. But it basically moved all the way up to the breakaway gap, worked its way around there, formed an order block, traded up into its mean threshold and displaced lower. In that displacement, this candle right here $12.48 candle, this is the lunch hour. It lacks manipulation, so this market basically pulled back deeper because of the lack of manipulation. Came all the way up to the 1247 CB, and it sold off, attacked sell side one more time here. And in the meantime, it's leaving equal highs here. So one reversal or one change in the state of delivery down below these sell sides will end up being a market maker buy model. But here's what I want to say here. The first time it engaged with the equal highs in this pullback here, it never offered breaker block. Thus, if you're long in this, I think you're doing it wrong. You wait for a breaker block. So here, price traded down into the sell side basically. Initially, I was thinking about it going for the 10 o'clock low, technically going for this low, the sell side. It didn't happen though. I wanted to see some sort of a bullish S&T divergence due to the fact that how price lacked sell side purge today. So like the initial pop didn't engage with the sell side. Here it also didn't engage with the sell side, so there's no manipulation on a higher time frame perspective towards the sell side. So I was thinking about a bullish SMT down here. Maybe ES could have taken this, or Nasdaq could have taken that. It didn't happen, unfortunately. That's why I kind of misinterpreted the price. But here it dropped to the south side, failed at the lower portion of this last wick, 25% of it, 75% I would say. 75% of that wick, and that wick rejection caused a displacement to the upside. Now we have a balanced price range here. This came down to work its way around inside this BISI and popped. This PA here, it's too wicky, too slow in my opinion. Basically slowly grinded up and then popped. But the most important thing here is I wouldn't have traded this either way if I was live streaming, due to the fact that this PA also lacks breaker block until up here. Okay, because in this leg, maybe it should have, maybe like it could have swept this low and then go for this or bearish order block, and then yeah, that would have been a unicorn or something like that, and would have been tradable. But in this case, it was not, for two reasons: lack of breaker block and lack of fair value gaps, lack of displacement. It was too wicky. Here's another fair value gap which got inverted initially, but then price basically moved away from it, popped, accumulation. It does some damage to the south side here. I wonder if there are any SMT divergences there though, because slow grinds usually end up having bullish SMTs. Yeah, there is one. This is one bullish SMT, and here should be one more. Yeah, NQ is going for the lows. Yes, basically leaving equals. So that being said, it led market to pop one more time, and that displacement. Now we have a breaker block basically, although it engaged with the equal highs here. Now we have a breaker block though. This is the breaker and a fair value gap. So market, after taking the buy side, equal low, equal highs, basically the market maker buy model on the 1 minute was completed before the breaker formation. So it traded down into the fair value gap, CE, and the breaker's upper portion, and popped one more time. Wow, what a day though. Like, the 1 minute order flow is ugly, but it was going for it, I'm not gonna lie. Here, another breaker block, priced after taking the buy side, it came down to the breaker block and the fair value gap. Inside that breaker, used it. Also, south side was taken on the 1 minute. Used that to deliver more buy side. At this point, I think any entry here in this price action, it's not smart. Like, this is okay, but afterwards, if you're entering, it's not smart because it doesn't have a high probability buy side. It's not building. It's just like wicking up, coming down, going up, wicking, coming down, going up, accumulating, going up, wicking, coming down, wicking. You know what I'm saying? In the last 10 minutes, because it was overexpanded, it just basically sold off, cleared these equal lows and these lows, and it's consolidating right now. Tough PA though. Like, in terms of lower time frame order flow, in my opinion, it was tough. Higher time frame was there for me though, for my liking. Right before FOMC minutes and CPI today, although it moved from 9:30 to close, so somewhere here, 9:30 open to market close, 170 all the way to the top is 225. Although it moved, in this PA, like when I zoom out, you guys can see it, like it's too wicky, not as clean. So prior to FOMC, prior to CPI, personally, I did not want to take any risks, honestly. To me, it was not worth it because the 1 minute order flow was not also clean or energetic at all. And also, due to the fact that the market lacked sell side delivery down here before the initial pop, I didn't like that. I still don't like it, but it's what it is. I'm not going to fight this, obviously. Another thing that I want to mention is the second leg. It came from range EQ. Basically one setup for life. That's another thing I wanted to mention. And it popped from there as well. So this is not a random level. It's basically the 50% of the first leg, and this is the second leg, and its order flow is on the chart also. The only thing that could have made me execute long positions today would have been Nasdaq clearing these lows at least before the pop, or let me pull up ES clearing these lows, forming a bullish SMT, and then pop to the upside, and that would have made me execute long positions today. But instead I personally let it go, and I still think that it's it was a smart decision, due to the fact that the economic calendar is suggesting tomorrow and Thursday or Friday will be more low resistance front, and it's going to be easier to trade on the 1 minute per time frame in terms of the order flow. So, but yeah, anyways, guys, hope you find this insightful. Let me go to the daily. So right now, the likelihood of this having a continuation here is a lot, in my opinion. I want to see a BC though. I want to see displacement, but it seems like it's gonna trade down into that wick. We have a gap up though, so the likelihood of Wednesday going for the quadrants of the buy side wick, maybe like the 50% of it tomorrow, is very likely, which is 170 points. Nothing for Nasdaq, but overall it looks bullish. I'm not gonna fight it. It looks bullish. I don't like the lows. I still don't like it, but it's what it is. If it's not willing to manipulate below those lows, it's not willing to do so. So who am I to tell Nasdaq to go for those lows, right? The breaker block is still holding. So today's low is essentially breaker block's upper portion as well, and we should see a continuation tomorrow. But yeah, hope you find this insightful, guys. I'll talk to you tomorrow. Have a great rest of your day.